What's up, traders? So today I'm going to show you how I make 2 times the money that others do while selling puts and calls. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader and I bring in multiple 6 figures a year from the stock market, and I use those funds in order to pay for my entire lifestyle. But before we get down to business, I want to tell you a quick story and give a quick message to anybody who is on the fence about starting trading. So I previously owned 2 restaurants, and in February of 2020, my manager, whose name is Chad, was up for his yearly review. Well, during his review, I asked him, was he doing anything within the stock market, whether it be investing or trading, and he told me no. So I began showing him what the possibilities could be while investing and trading in the stock market, and he became very excited, and I even helped him open up the brokerage account right then and there. And once we did that, we came up with a game plan for him getting started. Well, after that, several months went by, and I kept asking him, hey, are you ready? Hey, are you ready? And he would keep saying, I'm about to get started. I'm about to get started. Well, to make a long story short, now it's been nearly 5 years and he never got started. And him and I are still friends to this day, but now that it's been 5 years, I wanted to show him the potential gains that he may have missed out on over the past 5 years. And so I pulled up a compound interest calculator, and when we had the meeting 5 years ago, he said that he would start with about $5,000. So I typed that number in, and within my community, we aim to get about 4 to 8% per month. So I ran the numbers here on what he could have made even on the low end of that spectrum. So when we had that talk 5 years ago, he was 23 years old at the time and said he had $5,000 to start with. Okay, so in this column here, you can see the growth that he would have every single year. And then over here, you can see his end balance. So if we fast forward to 5 years, we can see it would have been $61,665 on the low end. And that's just the beauty of compounding your wins over time. Because we can see if we go down to 10 years, which he would be 33 years old, he would have turned that $5,000 into $500,000. And now how I trade and how I teach my students, the people who connect with it are the people that want consistent and reliable income. My trading strategy is geared for people who want to either supplement their income or just replace their income in total. And in order to do that, you need to have reliable income. I personally can tell you how much I'll make trading this week, the next week, the week after that, and the week after that. It's very consistent and reliable. I don't just buy calls on Nvidia and just hope and pray that it goes up. I need to know how much money is coming in and when. And so that was if he did 1% per week or 4% per month. How about if he did 2% per week or 8% per month? That $5,000 5 years ago would be nearly $360,000 today. In which that's pretty wild to think about, and there's nothing you could do about the past. You can't get it back. However, as the saying goes, the best time to have planted a tree was 20 years ago. The second best time is now. So that's my message for anybody who's on the fence on getting started. The possibilities are literally limitless. But that's enough of my spiel. Let's get down to business. So the way that I make 2x times the money as others while selling puts and calls is I use leveraged ETFs. Now, if you're not familiar with a leveraged ETF, it simply looks to move 2 or 3 times the daily move of a specific stock or sector that it follows. So as an example, if a leveraged ETF follows Nvidia, if Nvidia were to move up 1%, a leveraged ETF will look to move up 2 or 3% for the day. And the same works in reverse. If Nvidia were to go down 1% for the day, then a leveraged ETF will look to move down 2 or 3% for the day. And because leveraged ETFs are naturally more volatile than the stock or the sectors that they follow, the premium for the options are also 2 to 3 times more than the stock or the sector that they follow. So let's take a look. Now here's a list of my current favorite leveraged ETFs. So we have TQQQ that follows the NASDAQ 100, and so it moves very similar to QQQ. Then we have SOXL, which follows the semiconductor industry. So this moves very similar to ticker symbol SMH. Then we have TNA, which follows the Russell 2000 small cap companies. MSTU, which follows MicroStrategy. NVDX, which follows NVIDIA. TSLL that follows Tesla, and then UPRO that follows the S&P 500. All right, and not only are the premiums much larger, but typically the stock price is also much lower than whatever stock or sector that it follows, which makes it a lot easier for people to trade it even if you have a smaller account. But let me show you how they move differently. All right, so now I have both QQQ and TQQQ pulled up. So QQQ is the blue line, and then we have the leveraged ETF to it, TQQQ, as the black line. So you can see over the last year how they've moved similar within the same direction. However, TQQ's moves are much larger, and that's either to the upside or the downside. And year to date, QQQ is up 29%. And TQQQ is up 73%. Okay, and because of that huge increase in volatility is why the premiums are bigger, but let me show you the options chain. All right, so now I have NVIDIA's options chain pulled up, and I pulled up the expiration date for January 24th of 2025. And if we scroll down to the puts, I'm going to look at the money strike price. All right, so that is currently $140. And if we look at the mid price, If we were to sell a put right now, we would receive $560 for opening this trade. And if we were to calculate our rate of return, what we need to do is take the premium that we received and divide it by the money at risk. So I would do $560 and then divide that by $14,000 for the $140 strike, and we'll get a return of 4% for this roughly 30-day trade, which is a great return. However, let's look at the return we could get if we traded the leverage ETF to NVIDIA, which I personally like either NVDL or NVDX. All right, so now I have NVDL pulled up on the options chain and I selected the exact same expiration date of January 24th of 2025. So if we again scroll down to the puts, and we select the at the money strike again, which is $73, we will receive about $650 at the mid price. So let's do our calculations again. So again, we'll take the premium we receive, which is $650, and we will divide it by the money at risk, which would be $7,300. And that gets us a return of 8.9%, which is actually a little more than double the premium we received for NVIDIA. So that's a quick and easy way to get more bang for your buck. Now you do take a more risk with the possibility of the stock moving to the downside quicker than whatever stock or sector that it follows. But if you are an option seller, then you love the volatility. But guys, make sure you like and subscribe. If you'd like to learn more from me and get my exact trades in real time and learn my entire options framework, then come join the Trader Freedom community. The link is in the description below. You'll get all the things I mentioned previously, and you'll also be in a community of people that have the exact same goals as you. But that's it for this video. I'll see you guys on the next one. Peace!